Have you ever struggled to explain an investment's true value to a client or stakeholder? It can be difficult to communicate the impact of potential or even existing investments without a clear understanding of multiple on invested capital, otherwise known as MOIC or MOIC. This important metric cuts through the jargon and reveals the true return on investment. Hey, I'm James and welcome back to another episode of the Finance Alliance Express. In this episode, we're zeroing in on MOIC to uncover what it is, its role in private equity, and more importantly, how you can use it to sharpen your investment evaluation skills. Multiple on investment capital, or MOIC, is a financial metric used to evaluate the value of an investment relative to the initial capital invested. In simpler terms, it's a ratio to help determine the potential return on an investment. Alright, so how do you calculate multiple on invested capital? The good news is that it sounds a lot more difficult than it really is, believe me. MOIC is calculated by dividing the total value, current or projected, of an investment by the initial capital invested. So for example, if an investor puts $100,000 into a project and expects to receive $300,000 in returns, the MOIC would be 3.0. In private equity, MOIC provides a straightforward way to assess the potential profitability and efficiency of an investment relative to the capital required. You can use it to gain three key insights. The first is performance. A high MOIC proves the fund is generating strong returns for its investors. The second is comparison. It allows you to compare the performance of different investments or funds. And the third is potential. By analysing the MOIC of past investments made by a fund, you can get a sense of their potential for future deals. Now, let's talk more about how you can use this metric to influence decision making. As you may know, MOIC plays a significant role in shaping investment decisions, particularly in private equity. So here's how it can influence decision making and help companies make smarter business choices. Number one, choosing investments. MOIC is often used as a screening metric when evaluating potential investment opportunities. Investors often set a minimum MOIC that they expect. Deals with a lower projected MOIC might get passed over in favour of those with a higher potential return. Number two is risk assessment. MOIC provides insight into the risk-return profile of an investment. A high MOIC could mean a high potential return, but also potentially higher risk. Investors use MOIC with other tools to see if the expected return is worth the risk. The third is performance evaluation. MOIC is a simple way to measure how well an investment is doing. It tells you how many times you've gotten your money back. And this helps investors decide whether to hold, sell, or invest more in something based on its performance. The fourth is attracting investors. For companies and fund managers, showcasing investments with a high MOIC can be a powerful tool in fundraising efforts and maintaining positive investor relations. A strong track record of achieving high MOICs shows that they're good at managing money, which simply attracts more investors and funding. Number five is resource allocation. Investments with a higher MOIC might get more resources because they're seen as a better use of the money. This can also help CFOs when it comes to allocating the budget across departments. Number six is exit strategy. If an investment hits or surpasses its MOIC target, investors might be more likely to cash out and simply take the profit. Number seven is portfolio construction. Fund managers use MOIC to balance their portfolios and allocate capital across different investment opportunities. They may aim to maintain a certain average or targeted MOIC for their overall portfolio, which influences how they distribute their investments. So that's everything you need to know about MOIC. We really hope you enjoyed this video, and if you'd like to see more content just like this, please subscribe to our channel and check out our website financealliance.io for even more resources. See you in the next one.